Hi, this is Alessio Rastani, leading trader. Hope you're well. What a dramatic move here today. As you can see here, very dramatic and a violent drop in the S&P 500 in the stock market. As you can see here, this is the S&P as it dropped significantly lower down to its 200 daily average. And of course, it's not just the S&P, also the Dow. Take a look at the Dow, for example, also dropped down to its 100 daily average. And also, interestingly enough, the transportation index, which is a very important leading indicator. Take a look at this. The transportation index fell below its 200 daily average, which is very disturbing. I have to say, it's quite disturbing that it has done that. And again, I've explained why the transportation index is so important. But going back to the S&P, so the S&P, actually going back to the S&P futures here. So this is the live chart right now on the S&P here. Now, notice where the S&P has come down to. This is a very important level that you see here on my chart. Let me explain what that is. So if I just zoom out, you'll see that level that the S&P has dropped down to, that is the 200 daily average, very important critical support level. Often what's called a dividing line between a potential bear and bull market, although that's not necessarily true. There is actually a better definition of a bear market, which I explained in a previous video. But in any case, look where the S&P has come down to. That's a double support. A double support because we've come down to two major support levels. One is a 200 daily average. The other one is this trend line support running through here. Also notice that we are also, as you can see here, we are also oversold on the RSI. When the RSI gets oversold, usually we see some kind of a bounce. So for example, if you take a look over here back in September, when we hit oversold levels, the S&P had a little of a bounce. Back in August, as you can see here, oversold on the RSI, and then we had a bounce. So, and again, so given the fact that the S&P has hit support, double support by the way, with oversold conditions on the RSI, it's likely that in the next couple of days we might see a temporary bounce. That might take us back up, for example, to, let's say, 2,800, back to 2,830 potentially. Now, it's important to bear this in mind that sometimes when the markets come down to test key support levels, they might do what's called a seesaw or a tease. Let me explain. For example, if you take a look over here, back in August and September, well, actually, no, pardon, back in the spring of this year. So what you'll see here, the markets came down. The markets came down. Sometimes they come to the 200 daily average and they bounce off like they did back in February. Sometimes they come down to the 200 daily average and they do a seesaw. So they come down, go below it, and go back above it again like a teasing movement. All right, they tease us, as you can see right over here again. Comes down, goes back above it. So sometimes you see this seesaw teasing movement. So what we need to do is keep an eye on this. Basically, what we want to see is this. We need to see if the S&P can protect this double support at 2765. All right, that's the main thing to bear in mind. All right, can the S&P remain above this double support? So the big question everyone is asking right now is this the start of a bear market? Now, I personally don't think it is. Again, in my previous video, I explained in much more detail what a bear market actually would look like and what is a best definition of a bear market. I don't think this is the start of a bear market. I think what we need to do is be patient and let's see what the market will do next. For example, if the S&P, for example, were to close below this trend line, below this support, this double support, and stays below it, then very likely, yes, we're heading towards a bear market. So for example, if the S&P were to drop below the 200 daily average and below the trend line and then continue to stay below it, that would be a hugely disturbing sign. I think that's actually less likely. I think the more likely situation is that we might see a kind of a seesaw, again, kind of a retest, and then a bounce off these levels. And then we need to see if this bounce, what will it do? Is the bounce going to take us back higher, or is it actually going to halt at these levels? So the key thing for now is to wait and be patient. Wait to see if there's some kind of bounce. Is there going to be some kind of reversion back to the averages? Is there going to be some kind of dead cat bounce, if you want to call it that? That is actually far more likely given the oversold conditions and given the support levels we've reached. Okay, and then once we get the bounce, we want to see if there's any more follow through. Will there be more follow through higher or not? Or is it going to be turning around and heading back lower again? That's the key thing to watch. And that's how we can know if we're heading towards some kind of a bear market or not. So again, two potential scenarios here. Either we're going to see further selling pressure to come, perhaps less likely, or some kind of teasing movement here followed by a bounce. Okay, we're going to keep watching this. But of course, one thing just to mention here, the fact that the transportation index has sold off below its 200 daily average. That is not a good sign. That is not a good sign for the Dow theory. Dow theory, as we know, looks at the transportation index. That is not a good sign at all, what we're seeing on that. But in any case, as far as the Dow itself is concerned, Dow is holding the 100 average, and the S&P coming down to the 200 average, and we want to see if it's holding that level or not. All right, guys, that's what we got. Until the next update, have a fantastic week. Bye for now.